Mr. Dayal, I'll start with the most difficult question of them all. Do you see the Sensex hitting 1 lakh in a short period of time? What would be your telescopic moment for this wonderful number?
So I'm going to surprise your viewers and you with an answer. We've actually already crossed 1 lakh on the Sensex on July 6th, 2023. And the Sensex that we use, and the Sensex which anyone should use, is the one where you talk about the total return index, where dividends that you receive from the companies in the Sensex are reinvested in it. And I think we do ourselves a disservice when we take away this 2% dividend yield effectively and move it out of the Sensex and don't move it back. So going back in history, Quantum was the first fund house in 2006 when we launched a value fund to use the benchmark of a total return index, which includes this. So I'll give you the glib answer. We've already reached 1 lakh in July, and currently on a BSE 30, that's what I track as Old Guard, BSE 30 total return index, we're at already 1.35 lakh today. Okay. Now I know the other index is at 85,000 and come down a bit in the course of the day today. But if you ask me about that index, I first believe that the index will go down before it goes up to 1 lakh. I think it's got a better chance of going to 70,000 before it goes to 1 lakh, in terms of the non-total return index. And stock markets are either a casino or they reflect fundamentals of the economy, which reflect fundamentals of company earnings. If you do a long-term chart over the last 2 decades of India's growth in GDP and India's stock market returns, you'll find 2 instances where the stock market returns have been substantially more than what the economic activity would suggest. And that was 2005, 6, 7, the brick mania, and again now. And we know what happened at the end of each of those cycles, right? The market came crashing down and the index came back to touch the line of GDP trajectory. So right now you've got GDP growing this way and you have stock markets running above. That's a disconnect. Either your GDP has to grow substantially soon, not after 10 years, but substantially, or the stock markets have to come down. And I believe that given where we are, again, I should clarify and say that I'm a long-term bull. I wrote probably the first article on India in the Wall Street Journal in 1990, talking about how India was about to take off if the government reformed just a little bit. And the reforms happened in July 1991. So you're not talking to an India bear, you're talking to an India bull.